can you get a reverse mortgage with bad credit? The answer is maybe. So part of qualifying for a reverse mortgage is going through what we call financial assessment. Basically, what we're looking at is, do you have the willingness and capacity to continue to pay your property taxes and your homeowner's insurance once you get the reverse mortgage? One of the things that we look at in this is your credit payment history. So we're looking at typically the last 24 months of payment history, which includes mortgage if you have one, property taxes, homeowners insurance, and then obviously your consumer debt. So credit cards, car payments, student loans, etc. Just because you have bad credit doesn't necessarily mean that you won't qualify for a reverse mortgage. One of the things that we're looking at is whether or not the credit history was being negligent or was it due to what we call extenuating circumstances. Was there something that happened beyond your control that caused you to make payments late on your obligations? What is an extenuating circumstance? It could be an illness. For example, maybe you had cancer, which is awful, or you had a spouse that was horribly sick and you were taking care of them, or maybe you even became recently widowed or were widowed during the time where the credit history payments were not that great. So as long as you can document what happened and the late payments coincide with the documentation that you provide, then having bad credit history or bad payment history will not necessarily disqualify you from a reverse mortgage. Even if you can't substantiate or document any of the issues and it really was due to negligence, maybe you took on too much debt and just couldn't handle it anymore, that still doesn't preclude you from being able to get a reverse mortgage. Typically in those situations, we will set or require a LISA, which is a life expectancy set aside. So basically it's a portion of the funds that you could borrow is set aside to pay your taxes and insurance for you, which really, if you think about it, it's not necessarily a bad thing, right? You don't have a mortgage payment, no taxes, no insurance. That frees up a ton of cash flow for you. Where I typically see people being unable to qualify for the reverse mortgage that do have bad credit and the LISA is required is because they don't have enough equity in the property to pay off their current mortgage and set up the LISA. But there's a workaround for that as well. So if you don't have enough equity to pay off your current mortgage and set up the LISA, but you have other assets such as stocks, bonds, IRAs, savings, or checking account funds, you could use that money to pay down your mortgage balance so that you have enough room to set up the LISA. So there are a lot of variables here, which is why I would highly encourage you to talk to a reverse mortgage expert that can ask the right questions and get a better idea of what your situation is and whether or not you have enough equity to qualify if you do have bad credit.